Hello folks, this is Nate Paulson from Paulson Wealth Management with an April 2016 Educational Economic Update. In this video, we'll talk about some of the economic events that influenced markets in the last month and give you some insight into what they could mean for you as an investor. Please stay tuned at the end for a required disclosure statement. After several rocky months for the financial markets, March turned out several straight weeks of gains, giving investors hope for the spring. Let's talk about what happened. After months of strength, the US dollar weakened against other currencies, and a strong dollar makes domestic goods more expensive to foreign buyers, which has hurt corporate profits of late. A comparatively weaker dollar will help make US products more competitive on the global market, which we hope will be reflected in international demand for our goods. Last month was also important for central bank policies. The European Central Bank, Bank of Japan, and Federal Reserve all held meetings to determine monetary policy. In recent years, there has been a divide between the Fed, which is moving away from ultra-low interest rates, and European and Japanese central banks, which are fighting slow economies with negative rates and quantitative easing. However, discussions at the March Fed meeting show that U.S. economists are also becoming more concerned about growth themselves. During the March meeting, the Fed voted to hold rates steady and indicated that officials are planning for a slower pace of rate hikes later this year. Remarks after the meeting show that Fed economists are actually quite divided. Some officials want to start raising rates soon, while others favor a wait-and-see approach. However, Fed Chair Janet Yellen has been clear about her intention to remain cautious in the face of global risks. We also got some good economic news last month. The final estimate of fourth quarter GDP showed that gross domestic product grew at an annual rate of 1.4% instead of 1%. Much of the improvement came from stronger than expected consumer spending, which is great news for our economy. The labor market also continued to add jobs in March, which supports further spending. On the other hand, the increased spending at the end of 2015 may have come at the expense of growth in the first quarter of 2016. Consumer spending data from January was revised lower, causing Q1 GDP forecasts to plummet. Looking ahead, we'll be awaiting reports from the first quarter that ended in March to see whether the numbers support or weaken concerns about growth this year. We're not the only ones who will be closely monitoring the data. We know that the Fed will be watching ahead of its April meeting to see whether the economy can support additional rate increases this year. Will they raise interest rates in April? It's hard to say, but it's not likely. Currently, most economists predict a June 2016 interest rate hike, but there's always room for a surprise if the data looks good. That's it for the April Educational Economic Update. As always, if you have any questions or concerns about what we've discussed, please give our office a call. Again, this is Nate Paulson from Paulson Wealth, signing off for the April 2016 Economic Update. Please remember that nothing we talk about here is a recommendation. If you would like to discuss your personal situation, please give our office a call at 630-517-2950. We'll be happy to speak with you.